Futures rallying after the October CPI print came in line with expectations. You're looking at all three of the major averages on track to open the day in the green. Let's flip it over to the bond market and look at the reaction there. It might be a bit of a surprise to some here, but again, you're looking at the 10-year yield off just about 5 basis points, a move lower across the board. Let's talk about the market's reaction for that. We want to bring in Dave Mazza. He is the CEO of Roundhill Investments. And Dave, just quick, your reaction to the movement that we're seeing in the markets and whether or not it makes sense to you.
Yeah, it certainly makes sense. I think it's an expected move. There was a lot of chatter about that inflation was going to come in a little bit hotter than expected. Numbers were bang in line. And that's generally a positive because we know the Fed's has a real challenge here because the market had been focusing solely really on the employment side as inflation had been coming down. Now I actually think inflation is going to become front and center again, especially as we know with President-elect Trump's policies that really are likely to be inflationary, add to the deficit. And the market, after yesterday's breather, is now really, I think, set to continue to power ahead, especially as we head into year end.
What are the most at-risk sectors if we do see some of those policies come to fruition next year, and where it would also insert inflationary pressure back into the equation here?
Yeah, so it's interesting. So if we simply look at sort of the yield picture, we know that there's been issues with real estate, there's been issues with utilities. I think what's most important though, and which is to be determined, is how much of the rhetoric is actually just rhetoric when it comes to tariffs, or what's actually real. And that's where I think a lot of investors now are trying to parse through and understand that, because if some of these tariffs actually come into play, it's really going to hurt the bottom lines of companies and then at the end of the day, consumers. And I think that's why the market has now really been, again, gravitating back toward the Magnificent Seven and stocks like that, which we've talked about ad nauseum now for the past 2 years. And at the end of the day, they continue to sort of, in some ways, be this odd 2024 safe haven trade.
Are they back in the driver's seat, do you think, when it comes to the market's momentum and what is going to lead this leg higher?
Well, look, I mean, this isn't a novel concept. They're the largest weights in most indices, whether it's the S&P 500, the NASDAQ, and others. And I think generally people want them to be doing well because that means broad-based indices are doing well, even though there was, a lot of focus on this rotation that fizzled out pretty sharply over the summer. So yes, certainly from that point of view, they're really important. But the big question mark that I'm focusing on is what's happening next Thursday with NVIDIA, because that either is going to really kind of continue to keep the party hats on or actually be this big sobering effect to investors.
Are you on the sideline until then?
No.
Or how should investors be thinking about that?
I think after the euphoria that we've really seen in the markets, especially with, and not just talking about crypto here, really just broader markets, right? One of the best reaction on election day ever, one of the best weeks subsequent in election that we've seen in years. I think a lot of the expectations have been pulled forward. So certainly I think it warrants some caution, but we generally believe NVIDIA is going to put up another really strong quarter that's going to continue to boost investor sentiment.
I was able to run into one of the floor traders at the New York Stock Exchange yesterday. He came to our Invest event, and I hadn't seen him in a while, and he was running me through the fact that they had kind of been sitting on their hands for a little bit going into the election, and they have to readjust their own ability to kind of strategize a playbook for the next 4 years. They have that now, but it's tough to do over just 6 weeks until the end of the year. And it sounds like a lot of firms might be in that same positioning. So what are the themes that you anticipate needing to rotate into and needing to put around your playbook here?
Well, yeah, you're exactly right. So some of the market reaction was simply that there was so much hedging going to the election because for good reason, people thought it was going to be contentious, and we were not going to know the result with such clarity that we saw. And so after that, I think those hedges have come off. People have now plowed back into the markets. And now for the next 6 weeks, I actually think seasonality and generally this investor sentiment really is going to continue to be the boost, and that's going to help multiples, even though they continue to go higher. What gets more challenging is as we move into 2025 and we start to see exactly who's going to be in the cabinet, exactly the sort of depth of some of these policies, that it's really hard to tell, right? And that's why I think people are kind of sticking with what works. Momentum has been in favor. I think that's going to continue. And now we need to kind of parse through and say, are we actually going to see this massive change in policies, these tax cuts, what have you, because that's actually going to be ultimately the real driver of 2025.